Hello everyone and welcome back. Hope you're having a great weekend. So let's take a look here at long vertical spreads. So I want to look at my takeaways and my next steps, and I'll pull the spreadsheet on and off the screen so we can kind of take a look at it in conjunction with this particular PowerPoint. So number one was the win percentage. I think most people, when they trade options, they want to maintain a high winning percentage, and for a long vertical strategy, that would be really effective if you were able to get that high winning percentage. But as we all know, that it's a flip of the coin to determine which way the market's going to go. I think the sentiment has been bearish, but the sentiment has been bearish before and the market turned up. The sentiment now is bearish and the market's going down. If you can identify market direction any better than just flipping a coin, I can't see why this wouldn't be the best possible option strategy. It's pretty simple. You can't lose more than what you put in at the outset of the trade. Number two is don't stop. I think for myself, and I don't know if this speaks to you as well, but I think for myself, if I have 5 to 10 losing trades, I want to stop and I want to evaluate and I want to say, let's give the market a chance to calm down and then I'll get in and we'll see what happens. But the reality is we don't want the market to calm down. We want kind of the craziness to continue, because when you're trading long vertical spreads, you want the market moving. And so as long as the market's moving, you can be making money. You just have to get on the right side of the trade. And number three, a loss percentage can be higher than the win percentage and still result in a profitable strategy. Number four, analysis assessment. So I wanted to look at each trade, and I'm going to pull the spreadsheet back on the screen now. Take a look at each asset and see how things are doing. So right now I've got 2 wins and 3 losses on SPY, and that's netted me about about a $7 loss. It's actually a little bit more if you factor in the $2.56 round trip commission for each trade. But just looking at the profit and loss on SPY, it's about break even. So that's something I can live with. One more winning trade and this would be a profitable strategy. QQQ, I'm a 50% win rate, 50% loss rate. And it is a profitable position now. I've got $30 in profit there on QQQ. IWM has been the trade that just kind of crippled any chance at being profitable using this strategy. Every single trade I've made in IWM has gone against me. I think I've traded both bullish and bearish, and it seems like every single time I get it wrong. And so we're going to talk about that here in a second, what I'm going to do going forward, and just see if I can't get lucky and get it right. But right now I haven't won a single trade. And then you may remember in a previous video, one of these trades, it gapped down below my stop loss point, and I actually had a max loss on that position. So that certainly wasn't comfortable. TLT, I'm a 50% win rate, 50% loss rate, and I've got $87 in profit. And then finally, last but not least, is GLD. Again, I've lost more than I've won, but still about a $7 return. Now, it's a little bit less than that when you factor for commissions, but kind of like SPY at the beginning, it's basically a break-even trade, so it hasn't really hurt me, hasn't really helped me. And so does my analysis work in the current market? The answer would be yes and no, I suppose. But a strong no from IWM. Whatever I'm doing in IWM is not working. It's trending against me, or I'm just not catching when it is pulling back at the right time. If I'm both wrong and right, there's really not enough data to determine whether or not I am truly right in my analysis approach. Trading opposite my analysis on IWM is what I'm going to do going forward. Number 5 is strike width. I kind of went through and looked at all the trades that I'd made on my spreadsheet. If you look at the $4 wide trades that I've made, I've got 1 win and 0 losses, so that was certainly good, but not enough data there to tell us really anything. 7 wins and 8 losses have been $3 wide or $2 wide, but you can see right below it, 0 wins, 6 losses for $2 wide, so certainly not great there. And so we're going to have to address that. Probably $3 wide will be where I stay going forward. Days in trade. I also added a column for calculating the number of days I've been in each trade. 1 to 10 days, I have 6 wins and 6 losses, so 50-50. We know that right there, 50-50 is still a profitable strategy, so I'm probably going to try to stick around that time frame. After 10 days, I've got to really feel like maybe this trade's not going to work out. You can see after 20, I have no wins and 4 losses. So more data will certainly help to kind of answer this unknown. But right now, my assumption is that at 20 days, I'll be ready to move on. And when we started this whole long vertical strategy series, I wanted to maintain a positive expectancy, and I've done that for the most part on all of my trades, and that's resulted for every trade that I've I've taken that has been positively expectant. At the outset, I've won 8 times and lost 11 times, so it hasn't resulted in a positive expectancy at this point. More trades need to be made, more data needs to be collected. Negative expectancy, there have been a few trades that I've taken where the expectancy was negative and there were 0 wins and 3 losses on those. And so finally, the next steps based on what I've already kind of said and what we've already looked at is I'm going to flip the IWM trade opposite my directional assumption. So if I come up with let's say a bearish assumption, I think the market's going to go down. Well, I'm going to trade it completely the opposite of that. Trade $3 wide spreads. Those have been the best, and they came out to a 50% win rate. And we both know after looking at this that really with a 50% win rate, this can be a profitable strategy. I'm going to close trades at 20 days. So if it gets to 21 days, I'm going to be looking to close it, whether it's in profit, whether it's a loss. Maintain positive expectancy. Obviously, having the negative expectancy didn't result in any wins. I'm sure along the way, I'll have a negative expectancy trade that does result in a win, but right now that was not the case. So more data, of course, will make things more definitive, and I'll probably make another video similar to this as this kind of strategy series unfolds, assuming I don't just lose all the trades going forward and the account is kind of blown up. If I'm able to keep this thing going and I am able to win some more trades, I think these steps will actually help me to become a little more profitable. But right now I'm down by about $168, so not ideal. Hopefully in the days ahead we can get back on the right track. But thank you guys so much for watching. Until the next video, God bless and take care.